Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.
Hello and welcome to Kitco Mining here at Mines and Money in London. This morning we're talking about platinum and I have great pleasure to be joined by Trevor Raymond, CEO of the World Platinum Investment Council. Good morning, Trevor.
Hi, Paul. Good to be here and thanks very much for your time.
Well, thank you. And you've just been promoted to CEO from Research Director or Director of Research. Congratulations.
Thank you very much indeed.
Now, our audience is perhaps more familiar with gold and silver. Platinum is obviously a precious metal as well. So why don't we start off with a little bit of an overview of the platinum sector and the platinum market?
Certainly, Paul. So I think the interesting thing about platinum is that it's both a precious metal and an industrial metal. I think the reason it hasn't been around 3,000 years like gold has is its melting point, and it could really only be melted probably about 100 years ago. So platinum is certainly more rare than gold as a precious metal. If we just look at the global market, it's about an 8 million ounce a year market. 6 million ounces come from primary mining, and about 2 million ounces come from recycle, primarily from catalysts from vehicles when they reach the end of their lives. In terms of the developments in the market, pretty interesting right at the moment. We've got a situation where platinum remains significantly undervalued compared to gold and significantly undervalued compared to its one-to-one substitute palladium. We've also got a situation where supply is constrained and there's quite significant demand growth, and between this year and next we'll be moving from quite a significant surplus into a meaningful deficit. And then added onto all of that, you've got a nascent new demand, new end-use demand for platinum, mainly in its support for the growth of the hydrogen economy. So quite a lot of interesting stuff for people that haven't really looked at platinum before.
Okay, thank you, Trevor. Now, we're going to unpick some of those things. Let's start, we're coming to the end of 2022. It's been an interesting year for many metals and the platinum sector as well, the PGMs. A lot of PGMs are produced in Russia, and I imagine many Western consumers have sought to avoid using it because of the conflict in Ukraine. What have been some of the high points and low points of the year for PGMs?
So, Paul, I think if we just unpack 22 in terms of the data. So what we're forecasting for this year is that supply is pretty much flat on the last 2 years. So there's been some volatility in supply for a bunch of reasons, but supply has been flat on the last 2 years, but more importantly, it's 7% below pre-COVID 2019 levels. And that's certainly from primary mining as well as recycling. Recycling affected by automakers not making enough vehicles and people having to drive their cars quite a bit longer. In terms of demand, that's also been down, and certainly as a result of significant outflows of metal from ETF holdings as well as exchange stocks. But interestingly, given the situation this year, is that industrial demand has been particularly strong, largely on capacity additions that have already been baked in, and on automotive. So despite significantly lower consumer demand, both this year and projected, automotive demand has been quite strong because the automakers have been unable to make enough vehicles to meet new vehicle demand over the last 2 years. And as a result, the number of vehicles produced is still below what a recessionary demand level will be. And that's busy growing as, firstly, the supply chain issues of the automakers unravel, and that included, if you'll recall, the unavailability of semiconductor chips. So as a result, you've got automotive demand growing quite strongly together with industrial demand. And those ETF outflows have been fascinating because, firstly, the exchange stocks that have moved and the ETF outflows have been feeding significant imports of platinum into China. And that's probably been the biggest feature this year, is China's imported almost 1.2 million ounces more than their demand needs. So that amount doesn't reflect in the supply-demand balances, but it's certainly greater than the forecast surplus. And where we've seen that is the lease rates of platinum have been significantly increased. So what's basically happened is that exchange stocks and ETF stocks have flown from the west to the east. And once platinum gets into China, it's pretty difficult to export it. So you've got a lot of metal that is geographically captive in China. So quite a tight market despite the surplus this year.
And that's a situation we're seeing in many other metals, copper and to a certain extent gold and silver as well. That's people talk about the migration of the metals from west to east.
East, certainly, but I think in the other metals there's consumption of that metal in China, whereas this is quite unusual, that it's in excess of demand, and certainly the magnitude is quite enormous. so almost double their needs. And we think that's partly to do with building up of the fuel cell electric vehicle business in China. We also think loadings on Chinese vehicles are a lot heavier than has been acknowledged. And I think COVID has made it very difficult for commentators and researchers to get into China and actually understand what's going on. So we see a lot of that being quasi-speculative, that'll come out at much higher price levels, but also industrial users increasing stocks. And certainly a lot of that metal is being consumed on vehicles and in industry.
Well, thank you, Trevor. Now, much of the narrative this year in the metal space has been around battery metals or critical metals and what the various governments are doing and the shortage of supply and forecast deficits. What's the situation for platinum and the PGMs in this respect? As you mentioned, platinum is used in catalytic converters. The PGMs are a part of hydrogen fuel cells, that evolving sector or developing sector. What is the role and how do you forecast, how do you see that growing into the future?
So I think one of the big concerns is that I think the world is concerned that people will switch from internal combustion engine to battery electric vehicles quite quickly. A lot of countries in Europe are talking about banning internal combustion engines by 2035, 2040. I think the reality is that the infrastructure is not quite ready for that. And we certainly think that transition globally will take a lot longer to occur than 10 or 15 years. So as a result, you've got a significant tail of internal combustion engines. And what you want there is for those to be the most CO2 efficient. So in terms of availability of platinum and palladium, we're seeing a lot of substitution between palladium and being substituted by platinum. And that is really, you've got a palladium price that's nearly $2,000 an ounce, platinum price that's been $1,000 an ounce. And that delta has been around about $1,000 to $1,500 an ounce for the last several years. So this year we're expecting about 340,000 ounces of platinum to replace palladium. Next year about 500,000 ounces. And that's not too material for the palladium market, but it's certainly significant demand growth for the platinum market, and that's what's happening. In terms of your second question about the consumption of platinum in hydrogen applications, in terms of producing green hydrogen, platinum is used in electrolyzers to electrolyze water and to produce green hydrogen from renewable electricity. And then secondly, platinum is used in fuel cell electric vehicles where hydrogen is the power source. And I think the big change over the last few years certainly is that yes, you get lots of energy losses along the way, but if you use renewable electricity, electrolyze water and produce green hydrogen and put that through a fuel cell electric vehicle, not only are your emissions zero, but you've removed the need for fossil fuels along that entire chain. And I think that's what's been brought into question about battery electric vehicles particularly. You're really moving the emissions from the tailpipe to the power station. And if that power station is largely coal-fired, you haven't really solved the problem. And also there's quite a large carbon footprint to produce a battery vehicle. So I think we know that in order to decarbonize, we're going to need battery electric vehicles, certainly fuel cell electric vehicles, and efficient internal combustion engine vehicles. So that transition is busy happening. The demand for platinum from hydrogen applications right now is quite small, but moving into a deficit market, which we're expecting next year, even the small growth, which is likely to be in heavy-duty fuel cell vehicles, could make quite a material difference to that supply-demand balance.
Part of the narrative this year has been, the leading research firms are forecasting, there's not going to be enough copper, there's not going to be enough nickel, there's not going to be enough cobalt to meet the forecasts, the projected uptake of EVs and other technologies. It sounds like the platinum, the PGMs are going to be in that space as well. There's perhaps not going to be enough available to forecast to meet the forecast demand. So
platinum's interesting. So in terms of automotive demand, the growth that's expected there, and it's kind of counterintuitive. You would expect with recession that automotive demand would be down. It's actually up because of both increasing production and substitution. But in terms of the automotive, the need for platinum to support decarbonization, one is in electrolyzers. So there's two technologies, alkaline and PEM, and actually platinum-based electrolyzers are more suited to variable loads that come from wind and solar. And also fuel cell electric vehicles, which will be much further dated, almost sort of between 8 and 12 years demand, a bit of demand from heavy duty. So our estimates show that the increased demand for platinum by 2030 will be about an additional 1.5 million ounces, and that's on an 8 million ounce market. So it's quite a significant growth. Primary mining out of Southern Africa is just over 4 million ounces. So to increase that by 1.5 million is a big ask. I think policy certainty will help that. And the ore body certainly can support that expansion. So platinum's not in a dire need. The other good thing about platinum is the diversity of demand segments. So there's still about 2 million ounces a year that go into platinum jewelry use. And at higher prices, jewelry really isn't as critical as decarbonization. So if some of that jewelry metal at higher prices go into making fuel cell electric vehicles or electrolyzers, that's a good idea. And then equally, investment demand does give at higher prices, and bar and coin specifically provides a supply to give the industrial users the comfort that as that demand for platinum in the hydrogen sector goes up, if there is a mismatch between supply growth and demand growth, platinum's got the ability to handle those mismatches over time.
It seems from what you're saying, Trevor, there's a good basis for platinum prices to increase. The market going in deficit, you've got an increasing growing demand from the energy transition aspect. So what is the outlook for pricing?
So we don't forecast price specifically. However, if we just look at what's gone on this year, is that you've had this strange situation with a surplus and Chinese imports using more than that surplus, yet it hasn't reflected in the price. And I think the reason that it hasn't is we've had over 800,000 ounces that have flowed out of ETFs and exchange stocks. And platinum has been seen as a bit of a dog for a long time. The price performance has been pretty poor. So a lot of people are just a little reluctant to be bullish platinum. But having said that, nobody wants to not own it. The lease rates are particularly high, and there's good explanation as to why that hasn't reflected in the price. If we just look a year ahead, we're looking at supply growth of only 2% because of the issues I mentioned earlier, demand growth of about 19%. And that really is on automotive, on substitution. And again, in 2023, we're expecting industrial capacity expansions that are already locked in. So despite this recessionary outlook, you've got a situation where platinum's looking particularly interesting, and that certainly should reflect in price, particularly with the metal being unavailable to the West, that metal that's locked up in China.
Thank you. I'd like to sort of get into a bit more about the investment demand aspects. Kitco sells platinum bars and coins. Bar and coin demand, I think your organization published a report recently. You forecast that demand for those is going to jump 49% next year. I mean, that seems to be very, very positive.
Okay, so I think in terms of platinum bar and coin, it's one of the sort of oldest demand segments. And the most mature market for platinum bar and coin is actually in Japan. Japan retail investors have been buying platinum bar and coin for many, many years. We have seen an explosion over the last few years of that demand in the West. And during 2020, during COVID, investors wanted a hard asset, and retail investors in the US particularly wanted that metal. So in 2020, there was over 500,000 ounces of bar and coin demand. We're expecting over 500,000 ounces next year, and this year of about 350 was interestingly in Japan, because that's such a mature market, people tend to buy when the price is low and sell when it's high. Now, you had a significant weakening of the Japanese yen, and the price of platinum in Japan went over a key 4,000 yen per gram mark. So above 4,000 yen, and I think it went close to 4,600 yen. So you had a lot of selling back in Japan, and that's why bar and coin was depressed this year. So that 49% increase is reflective of the Japanese investors, although the price is still high, starting to be affected by energy, by inflation, and certainly a lot of younger Japanese investors wanting to hold that metal. In terms of the West, another aspect of our business is not only providing data, research, and insights to help investors make more informed investment decisions. We also work with partners to make sure that platinum investment products are available. And we did a lot of work with the Swiss refineries to get more platinum bar and coin onto US soil. And had we not done that, the metal really wouldn't have been available for the huge surge in demand. Similarly, we've worked in North America with Kitco. There's a bank, sorry for the plug, but TD Bank in Canada actually sell platinum bar and coin along with gold and silver in their branches. So there's a strong demand for physical metal in North America. And what we're doing is trying to make it easier for investors to understand the investment case and see that it really is quite interesting at the moment.
Okay, so we're coming to the end of 2022. 2023 is on the horizon. What are some of the key things we can look out for in the platinum space next year?
So I think one big theme, and you touched on it earlier, is constrained supply. So, if we just look at the Russian invasion of Ukraine, there's no sanctions on palladium or platinum. And I think it's a little bit like German natural gas, that Germany just still has to use Russian natural gas. However, if you stopped palladium going into the US, you'd have to stop making gasoline vehicles. So that sort of sits in the same space. Russia provides about 40% of mined palladium and only about 11% of platinum. So from a platinum point of view, it's a concern. Going into 2023, certainly the largest producer, Nornickel, that produces nickel that has platinum and palladium as a byproduct, they certainly are expecting some reduction as a result of sanctions. They can't get spares, they can't get reagents. So that is a concern in terms of supply. The other interesting thing is that the demand growth in 2023, again, counterintuitive, very strong automotive and industrial, and a significant swing in investment demand to positive. So we've got a meaningful deficit in 2023 of about 300,000 ounces. And then again, any demand from hydrogen applications suddenly starts to become more interesting in that environment. And then the last thing, Paul, is that if you just step back a little and look at asset classes and investment, if you look at metals, they tend to be more pro-cyclical. Platinum investment demand is only about 5% of demand, whereas gold investment's about 40% of demand. And what that means is typically in your economic cycle, platinum would get a boost from consumer demand on the upside, but it does have a shock protection from its precious metal demand. And right now we've got a slightly different situation where even though we're on the downside of an economic cycle, the fundamentals of platinum are looking quite interesting, and as a precious metal, it's still particularly interesting. So any increase in investment demand is certainly likely to play out in price. So the whole thing's come together quite fascinatingly for 2023 for the platinum market.
Okay, so the big question, will platinum prices go on a tear next year?
Will platinum prices go on a tear? Sorry, I didn't hear the term. So again, we don't forecast. However, I think there's a much greater likelihood that platinum moves towards the gold price and that platinum moves towards the palladium price. So that substitution ratio, if the automakers are substituting as aggressively as we believe that they are, they can save about $1 billion a year on their bottom line cost of vehicles. And we know they've taken a bit of a hammering. So our feeling is that the value should be reflected in price. So for platinum to move more towards the palladium price and more towards the gold price, I suppose that would qualify as a tear in your words, Paul.
Well, I'm sure there's many people that would be very happy if that happens. Trevor Raymond, CEO of the World Platinum Investment Council, thank you very much for joining us this morning.
Thank you, Paul. It's been a pleasure.
And join us for more from Kitco Mining at Mines and Money London.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.